What's up, everybody? I'm Sanna Garrett-Smith, aka the Financial Drill Sergeant. If you're looking to get your taxes done, don't hesitate to call BCT Tax Center. Because why do you want to come to us? Because we're going to give you a free vacation. Listen, you've been cooped up in the house long enough. Get your taxes done with us and take a free trip to Las Vegas, Florida, or Mexico. You got 120 locations. We got you. Come see us. Take a trip and see what we do during the day. Call us now. Come see what we do on the inside.
Hey everybody, I'm Sanna Garrett-Smith, founder and creator of BCT Income Tax Center. And I want to thank you for taking the time out of your busy schedule to watch this information because it is life-changing. Now, pay attention to everything in the video that Keontae's going to be explaining to you. She's going to walk you through the cash flow manager step by step. All you have to do is follow along. Make sure you got your computer up while she's following along with you, and then set it up exactly like the schedule. See, that way you can show you. She's going to show you how to audit-proof your business. I'll see you on the inside. Thanks.
Hello, everyone. My name is Keontae. I'm going to be taking you through the cash flow manager, as well as a bonus of how to understand the expenses that you're going to be annotating and keeping track of, and getting into the Schedule C, which is going to be your ultimate, money maker when it comes to tracking your expenses and what you report to the IRS. So if you are not familiar with the cash flow manager is a system that could be that is associated with MyEcon. So if you have not heard of it, please get with the individual who recommended you to this video, and definitely get with them and ask them a ton of questions to get more information. So a little bit about myself. I have been doing expenses and bookkeeping since, my goodness, since I was at least 7 years old. So my family always owned businesses, and I was in charge of taking all the receipts and putting them in order by the Schedule C, putting them in chronological order by each category, and highlighting the date, the amount, rewriting everything, everything to make sure our books were together, just in case we ever got audited. So that was my frame of mind since I was a kid. I took that into my own business as I went through college, and that fed me, took care of me outside of college, and definitely was my overall backbone and made me a better person and helped with my financial management. So this is definitely something that is not new to me, and something that has practically raised me. So to get further into this, thank you for joining us, BCT Tax Center, and let's get started. Okay, so for you that are not familiar with the Schedule C, this is what the form looks like, and all the top information is basically information that's already knowledgeable to you, your name, everything. That's not the part that you need to worry about. This is what matters with the Schedule C. Each one of these are category expenses that you can get credit for your business. Okay, so this is how you end up protecting your money. Overall, there's a category for everything, but if it does not fall into one of these categories, we have an other. We'll get more into each the expenses in a minute. Okay, so let's get into this. So the cash flow manager. If you're not familiar with the cash flow manager, go ahead and get logged in to your account. If you have already been giving the video and all your information, then you're good to go. So get logged into your account. In this, you can also download the app on your phone. We can access. So once doing that, you can easily be able to enter in your income and expenses, capture receipts, all throughout your smartphone. So you could do the same thing with setting this up on your tablet as well. And this is what it would look like on your phone. Once you go ahead, and this would be great because once you take pictures on your phone, you don't necessarily have to keep the hard copy anymore, unless that's something that you want to do. And that's that you're more than welcome to do that. We'll just know that whenever you keep hard copies of receipts, you want to keep them in order by category, as well as make sure you highlight and rewrite the date and the number, the amount on there, because they'll fade over time. So additional things that you can do with your cash flow managers is get P&Ls, profit and loss statements, be able to see how much you spent overall, wealth tracker, so that way you can see how you're doing with your budget. It gives it to you in different viewpoints, but here's one example of it. And the way that you would access the cash flow manager from your account is you would go ahead and log in. And this is the page you should see when you log in. Click on income shifting membership. Once you click there, all you have to do is click on cash flow manager. Your cash flow manager does not look nearly as busy as this one. Yes, admittedly, we've been doing this for a while. So, yes, our cash flow managers have built up, even with the cleaning them out every year. So, yours would probably be empty. What you would be able to do is scroll down to the bottom and click Create New Cash Flow Manager if you had nothing in there. If you already had some, this is where you would see them. You could see the information on them, name of it, when it was created, last time you've been inside of it, if you want to rename it, or if you want to delete it altogether, that's what you could do. So let's go ahead and click on our create new. So you want to go ahead and create new. We are specifically talking about business cash flow manager, but you could equally do the same thing with your personal side with creating a budget and keeping track of things. Um, Doing it on the business side, we're focusing more on that by discussing the Schedule C, which doesn't apply to you on the personal side at all. So the way that you do is once you go ahead and set up your new cash flow manager, it'll take you to this main dashboard. Dashboard has several different options. You could choose enter new income if you want to just get straight to looking at entering a new income. Enter new expense if you want to go ahead and directly enter in a new expense. If you want to get into creating a budget, which you get more into on the strategy, the cash flow strategy side, this is where you enter it. If you want to be able to view and edit the recurring expenses or income that you have annotated in your cash flow manager, this is where you will see it. And then it's pretty self-explanatory. So to view and edit all your income, your expenses, if you want to make some adjustments on your preferences, this is where you can for your account. This is where you click it at. And then unassigned receipts. What this is let's say you have your phone and you take a picture to capture, but you never actually submit the receipt, the expense, then it'll just stay floating in the software, and then this is where it would be stored, so you know where it's at. If you're ever wondering where it went, so let's go ahead and click on Enter New Expense. So when you get in here, empty boxes with a who, what, when, where, why, basic questions of whenever you're asking about expenses or income, whenever you're taking in or taking out money. And then this is one of the first things at the top is the categories. My econ is great. It comes with several different categories. They're all useful, but the thing with this is people get these categories and they don't know how to use them correctly. And what I mean by that is it makes it more confusing. By making up what you think what your expense should go in rather than what it actually needs to go in if you just made it match the Schedule C. This makes it easier on you as well as your bookkeeper or the person doing your taxes, because whenever you put things in as like, let's say fees, well, if you're putting in there all types of fees instead of, we'll go into the different types of fees when we talk about the Schedule C. But if you're putting in all the fees that are not applicable to the fees that are talking about in the Schedule C, this is going to confuse your bookkeeper, and you're going to have to spend more time with them, and they're going to ask you more questions, which is going to cost you more money. So yes, these categories are great and they're detailed, but I would not use these. I would make your categories match the Schedule C. Okay, well, the next question is, Chianti, how do I make a match the Schedule C? So let's go backwards a little bit. So this is what it looks like, just the entire view. Select expense type. This is where you put in you put in the Schedule C category, and we'll get into how to do that in a minute. You have the option to input so the date that expense is actually occurring, not when it actually posted on your credit card. When did it actually occur? When did you do that date? The amount that it's for. Make sure you include tip, or make sure you're making sure that you're specific. So if you, let's say, bought some office supplies from Walmart, but you also bought a Kit Kat, personal Kit Kat, make sure you're separating the amount. So take out the Kit Kat and whatever it is for the Kit Kat and taxes. So, and then put that in there for the amount. Who is who you gave the money to. Who would be Red Lobster? What would be dinner with Bill Gates? So when it comes to meals and entertainment, and we'll talk about this when we get into the Schedule C categories, you want to be as specific as possible. Always think about if I were getting audited, all the questions that the auditor would ask you. But if you go ahead and prepare your books as such, you won't have to worry about that. An auditor wants to know where, so city and state, or was it online, something like that. Excuses for being out of whack. Notes, discuss a partnership. That's something that's optional that you can put in. Odometer reading. That is another thing that is optional, the beginning and ending, but you always want to include the miles. Yeah. So what that means is this is can be easy estimates, or you can easily go on on Google Maps and put in, if you have a home-based business, this is the distance from your home-based business to that location. And it could be the same thing if you were in a brick and mortar and you had to go to like in a meeting outside of your brick and mortar. Not if you were going to work every day, that's not counting. But if you needed to go to a meeting outside of your brick and mortar, then that will count. And so you want to do mileage there and back, because you got to get back, so that counts. And then this just gives you the option to save it under different vehicles. If you have different vehicles that you use for work, you want to annotate the mileage that you accrue on each one of those vehicles. So you can do that here. It gives you up to 3. But yeah, the beginning and ending reading for the odometer is not as crucial as making sure you have the right mileage in there for a round trip. And then lastly, there's a section down here for recurring charges. So if you can adjust this to be weekly, monthly, daily, and how you could have it be where the next entry starts on, and then from there it'll pick up the cycle for whichever how the occurrence that you set it for over here. So with that being said, getting into the who, what, when, where, why, we already touched on that. Now let's talk about more about the categories and why it's important. And this is going to be what saves you money and makes your bookkeeper and tax preparer your friend. So let's get into it. Actually, let's go backwards. So now you want to know how you make your own customized category, because MyEcon gives you your own. You're going to click on custom expense type in the right hand corner. It will take you to an empty section. Oh, most likely you will see none there. If you see some there, then you can have the same option to delete or edit the name, just like how you can in the dashboard. So what you're going to do is click on Create New. And in here, it's going to take you to this page where you can go ahead and input the name of the Schedule C category. Now, before you go ahead and just throw in anything based off the Schedule C. Let's go backwards real quick and let's take a look at the Schedule C. 20 categories. So if we're going through here, we want to make sure we line it up with the number that it pertains to. So if you looked on the page that we were just on, it's had 8 advertising. So we're going to do the same thing with 9 car and truck expenses, 10 commission and fees, 11 contract labor. Just make sure you just put them in there exactly how they are. And so what that'll look like was what you just saw on that page. But since we're on this right now, let's take the time to go through each one of these categories to provide some more insight, because this is what catches people up. You know, people most of the time don't have a hard time with keeping track of their expenses. It's how they end up categorizing them. They think they overcomplicate things, is what I found. So just to go ahead and have a good frame of reference before we get started into this, a great document for you to reference and to go ahead and always fact check me, because you want to go ahead and be, you know, the master of your knowledge, is these 2 IRS publications. Now there are a couple more out there, so definitely look into this on your own accord. But IRS publication 463 is the 2019 version right now. It gets into travel, meals, and entertainment. We're going to talk about these heavily because this is a lot of money in this, a lot of money. So look into travel, meals, and entertainment. Transportation, we're going to discuss our mileage, the mileage rates, and you know why it's more important why it's extremely important to keep track of your mileage log. All this if you want to fact check, it can be found in IRS publication 463. Record keeping, what is considered adequate record. So just because I'm telling you something, that doesn't mean anything. You know, I told you my credentials, but you don't know me from a hole in the wall. So if you want to get your own information, this is where you're going to go. IRS.gov. All this is in here. Everything I'm saying is just being regurgitated from outside of this publication. So depletion, we get into IRS publication 535. You know, this is won't apply as much to you, but this could still be useful for you to reference, you know, regarding taxes, your other expense category, because most likely you're going to have a lot for those. So if you happen to have any contractor or W-2 under you, for those that are in that type of business and into payroll, then this is what you're going to need to be looking at. Additionally, if you have not received the common tax deductions quick information packet, then please get with the person that referred you to this video, and they will go ahead and provide you with this packet. It has a ton of also great tips on how to keep track, how to differentiate between business versus personal expenses, why it matters to keep basically the same things I'm saying, and also referencing hand in hand the IRS publication. This is a great article right here. So definitely give it the person that referred you to this video, so that way you can get access to this. This is life-changing stuff once you get a hold of and get an understanding of how to do your taxes, and why it's so important. Okay, so now that we've got those out the way, you know where to reference. Everyone can do their own due diligence outside of this class. um, but to get back into this, so let's start at the top. So advertising, pretty simple, exactly what it sounds like. This includes business cards. If you get postcards made, let's say if you decide to get your car wrapped and your wrap has your logo, your business logo, that is advertising. So things on there are advertising. If you need to pay to get a radio ad, um, to get a radio ad on the air, that's advertising. Now, the tricky thing with these expenses is some of them may tie together. Even within the same receipt, some of them can tie together. So let me give you an example. Let's say you needed to create a radio ad. So the radio ad paying for the time on the air would be the advertising. But if you had to hire someone separately to create, the ad itself, and you had to hire a contractor, that would be another category. You wouldn't put that contractor fee under advertising. You would put that under contract labor, number 11. So some of these work hand in hand, and that's why it seems extremely detailed, but I'm telling you, if you ever, God forbid, have to get audited, which I've sat in several audits, you're going to be extremely happy that you have this. So it's rather do the work now or do it later. And what's the pain? If you do it and keep up with it, it's not that bad. So that covers advertising. Car and truck expenses. So this is one of the main ones that we talked about, were our bread and butter. So the way this can be broken up into two different sections. You can do credit, you can get credit for your actual car and truck expenses, or you can get credit for your mileage. So what that means is, for your car and truck expenses, if you need to get an oil change, if you need to get a brand new tire, I don't know, if you need to get your wheels aligned, all that can be written off. You can get your money back for that. Or you can get credit for every business mile that you drive. So this year, I want to say it's about what is it, 55 and a half cents. I have to go check. It's 55. It's 50 something cents for sure. It's always pretty much maintained above that line. So just think about that. Every business mile that you drive. So remember, if we go back and we touch down here, let's just keep it even numbers. Let's say you did 10 miles. So you drove 5 miles to get to this person's house to talk to them about real estate, and you drove 5 miles back to get back to your home, your home-based business. That's 10 miles. Let's say at the bare minimum you get 50 cents a mile. Now, just like that, you get half of that back. You get $5 for driving over there. That's a big deal. Now, do you see how all that can add up over time? So people that are not getting credit for their mileage are seriously missing out, especially when they're on the road all the time. And so the key thing with this is you can only get credit for one or the other. You can't get credit for your oil changes and then try to think you can get credit for driving over to go see Karen. It doesn't work like that. So you have to elect to choose only one. So I used to always encourage my clients to choose the mileage, because it's just you're leaving too much on the table if you don't. So go with car and truck expenses and choose your mileage. It's the way to go. All right. Next, commissions and fees. This is something that we talked about briefly, when we reference fees in one of the categories that MyEcon has to offer. Well, this would include, let's go back to real estate. If we're talking about real estate agent, there are fees that are attached to being a real estate agent, or the commissions are taken out of, by their higher up. So all this can go into there, and all that is a write-off if you're claiming it under your business. So make sure that you're actually doing business things, like you have an EIN and you have your business registered. So depletion is not one we're really going to get too deep into because it gets into minerals and oil and all that stuff, and most likely that does not apply to you. If it does, please call me and we could be friends. Depreciation. So we with depreciation. In section 179. This is one of those awesome, another great categories because people take for granted depreciation. When you buy large ticket items or items that are going to last, that are durable for years to come, all that you're able to write that off over the course of the lifespan of that gear, that property. That's something you have to work out with your tax preparer based on, each item of equipment. But yes, all that is written off. You break up the value of it over the course of years, and you're able to claim that write off for more than just that 1 year. So depreciation and having a good idea and keeping track of that is key and can help you out in the long run. Employee benefit programs. If you're someone that has employees, then this is going to be something you're really going to look into. Any type of benefit programs that you offer to them is tax deductible. But you probably already knew that if you are already working with employees, which are W-2 and not contractors, meaning you pay their payroll and you pay their taxes. So let's keep that in mind. Insurance other than health. So if you need to pay for, let's say, renter's insurance for the property that you're renting out for your business, then boom, you can write that off. If you need to pay for storage insurance for, I don't know, all your business equipment that you're keeping in the storage unit, that's all a write-off. So insurance that applies to your business can be written off. The same thing with interest. So if you went and got a mortgage in your business name, you can write off the interest of that. And then if you got any type of other interest, let's say if you have credit card interest in your business, that is a write-off as well. 17, legal and professional services. So when you come to BCT Tax Center, when you come to us to do your wonderful taxes, and we're the ones that are going above and beyond and showing you, the true value and why you hired us, and making sure that, we file your taxes to our utmost ability and get all of your allowable deductions. That costs a fee. That's something you can write off under your business. Boom. Pay to get the best service you can and write it off. Office expenses. Okay, so this is one that we're going to talk with in tandem with supplies. So office expense and supplies definitely work together because I see people confuse them the most. So what this means is, let's talk about supplies. Supplies are perishable items that don't usually last past a year. So staples, paper, ink. That stuff is going to be pretty much used up. But office expense, things like the stapler and the things that are going to house the things that are going to last for a while. All these are counting under office expense. So that's pretty much how you break it up. The things that are being used are the supplies, and the things that are housing them are the expense. And then if you get into large ticket items, like let's say if you had the ink and you want to count the printer, well, if the printer is expensive enough, to talk to your tax preparer and your bookkeeper, then that can be depreciated as well. So that will fall under depreciation. So things like that can very easily fall into different categories. But definitely, if you have questions specifically on them, talk with a tax professional. Let's get into pension and profit sharing plans. So a great thing people don't take advantage of. If you are making a profit from your business, you can invest in a self-employment plan, which is your version of an IRA or a 401k for self-employment people. And so that's only when you're making a profit in your business, and you can write all that off, and that will go under line 19. Moving on to line 20, rent or lease. This is pretty self-explanatory. If you're going to rent or lease any type of vehicle, so if I need to get a rental vehicle, to travel around town for whatever reason, this is, that's a write-off. As long as it's for business, machinery. Let's say if I need to buy a helium tank because our company is throwing a party and we need balloons, I need to rent that helium tank, boom, machinery, and then the same with equipment. If we needed to rent a massive printer, instead of buying it out, then this is where that would go. And then if we rent to other business property, that is all a write off. Repairs and maintenance. So anything that goes into repairing and maintaining your business. Um, that can include if you need a fresh set of paint, that the paint would be that. But if you hired someone to paint the wall, then that would actually go under contract and labor. But the supplies, the maintenance would go under repairs and maintenance. So it's definitely tricky depending on how you end up hiring people. But don't make this more complicated than what it needs to be. Throw it under repairs and maintenance. If it's fixing up your business property, don't try to fix up your home and it can only be improvements. I'm sorry, it can only be repairs and maintenance. It can't be improvements. So don't try to go and add on, some extra square footage and write it off. Not with this LLC. We already discussed supplies when it's tied into office expense, so no need to get too back into that. Taxes and licenses. When you have to pay taxes and licenses on things for your businesses, all that is a write off. All of it's a write off. If you need to get a business license, that's a write off. Travel and meals. This is going to be where the money is at. This is right along with the mileage. It's going to definitely take a big cake of your expenses because a lot of times we eat out and we're discussing business and we're not writing it off. So let's talk about this. So travel. So this is broken into two different sections: travel and then deductible meals. So travel, you can write 100% of your travel off. So if you needed to travel to, let's say, Atlanta from Miami, that flight is a write off. The hotel is a write off. You can write it off. That goes under travel. The hotel, if you needed to pay for baggage fees, that will go under there. Um, but let's say you're out and about in your hometown eating or taking someone out on a meeting, you pay for the meal. That meal is half of that meal is now able to be written off. So you don't get the whole 100%. You only get half of it, which is still better than nothing because you were already going to spend the money to take them out anyway. Now you can get half of that money back. That's a big deal. Utilities, electricity, gas, all that is a write off. If you're going to be in your personal home and have a home based business, you need to be making a profit in your business to be able to write it off. If you have a brick and mortar, then yes, it is a complete write off and it will go under category 25. And wages, if you're paying anyone, this is where this is going to go. So just like if you're paying 1099 would be contractor labor and W2 would be 26. That's the basic breakdown for that. And anything else that doesn't fall under all these other categories would go under line 27 alpha, other expense. And the way that I would encourage you to write this in there, it just would be 27 other expense colon what that expense category is. Make up your own category and group them by like kind. Let's say if you've been giving a lot of gifts, you have a category for gifts. So colon gifts. You will put all those any other expenses that are similar to that gift expense. You would throw it all under that other expense category. And then because what matters is your tax preparer has to write out each other expense that you have. So if you're writing out gifts for Tanya, gifts for Sharon, that we don't care about that. We need to just a total. How many gifts? All I need to know is the category. Keep it consistent. Um, if you have multiple of one thing, put it all of the same thing. It's a category. Let's not make it complicated. So that will go under other expense. But keep in mind, yeah, your tax preparer has to write out each other expense, and that can be daunting for people who I've seen people have like 100, 200 of like other expenses, but then like there's similar things they could have all been combined, so they have to kind of go back up the hill and group match them. And I'm trying to prevent that from happening to you. So hopefully that's pretty much covered all the Schedule C expenses. To get back into the cash flow manager, like where we were at before, you have to enter in and create your own custom expense type. So once you do that, this is what it would look like. So go ahead and take all the information that we just learned from the Schedule C and you put 08 advertising. That's what we're starting with. And you will end with 27 other colon, whatever that category is going to be. Just quick tip. If you put a 0 before your single digits, it'll make sure that they stay at the top rather than the bottom because the system, for some reason, I don't know, it brings them to the bottom if they don't have a zero. Just give you, if you're wondering, if you like yours 0809 and then 10, then that's how you need to do that if you want that to happen. So once that's created, you can go back to your cash flow manager, go back to enter new expense, and you'll be able to now see that expense that you just created into here. So you would just do the same thing from 8 all the way down to 27. And then you would just throw it into here. This is what this would look like. So if you needed to pay Sanna Garrett-Smith for, well, the category would be advertising. So let's say if this was actually, I don't know, business training on, or she would to give you some business cards. Would be more accurate for the what, and then the where would be, if you wanted to use just an arbitrary, or an address where they stay, or if you wanted, where if you met them somewhere, if it was online, then you could just put online. And once you have everything in there, this is what it overall looks like. So if you break it down and you have it categorized, it'll break it down like overall if you categorize them. So if you went back to this main page when looking at your cash flow manager, let's break this down a little bit. Dates. So this is going to be how you set up your custom range for your dates. If you want to view the year, you can set a load filter. You can do year to now, or you could do, month to now, different type of, if you wanted to load different filters to be able to view. Your expenses, if you wanted to be able to view income and expenses at the same time, all you would have to do is check both of these boxes. If you want to uncategorize, so basically it puts it in order by chronological order rather than breaking it down by category, then you could just check one or the other. When it comes down to printing out reports, this is the area where you're going to do it. You can print specifically your mileage log. Remember what we talked about, your mileage log is going to be key, because your tax preparer is going to take that number and then divide it by, or multiply it by whatever, that amount is for each mile for that year. And so you can get that money back. So you want to make sure you're keeping proper track of that, and that's going to be key. So the key was staying ahead. If I could pass any advice along, the key is was staying ahead with your bookkeeping, is just staying consistent with it and doing it and reading up on it. I know this is something you can easily pass off to someone else, but you should want to maintain your own knowledge of this, because it is your money. So, understanding what's being put on your social security number is pretty important. If anyone has any questions, if you want to gather more information about this topic, please get with the person that sent you here today. And I hope this was helpful to you. And I hope you're able to get this Common Tax Deduction and Quick Info packet, because it really is awesome and very knowledgeable. Check out those IRS publications, and I look forward to see you guys at another day.
Are your business taxes eating away at your bottom line? Is your current CPA costing you money? Hi, I'm Sanna Garrett-Smith. My partners at BCT Tax Center recently shared some of the top tax deductions you might be missing out on. For example, did you know you could hire your children and reduce your tax liability by over $12,000 per child? Did you also know that you could do bookkeeping strategically so that it finds you opportunities to save and make more money in your business? And much, much more. Like a regular medical checkup, taking the opportunity to review your current tax plan is critical to your business health. But I know you really don't have time to do it yourself. So that's why my partners at BCT Tax Center have created a free, simple questionnaire that will help us diagnose your current situation and then provide you with a personalized blueprint to help you keep more hard-earned money in your business. This is the free 57 secret strategies to explode your business blueprint. And just to let you know how much I want you to succeed, I've talked my partners into guaranteeing that with the blueprint plus a quick consultation, we will find at least $10,000 in missing potential tax deductions. Or we'll pay you $100. And guess what? To sweeten the pot even more, I'll throw in a free vacation that's valued at over $1,500. Again, all you have to do is fill out the questionnaire, get your personalized blueprint, and then spend a few minutes meeting with a member of the BCT Tax Center team to help you keep more of your hard-earned dollars. If you're ready, now is the time to get your blueprint. Click on the button below.